I'm going to be direct with you. Something extraordinary is happening right now in the precious metals markets, and most people are completely missing it. While the mainstream media talks about stock market rallies and cryptocurrency volatility, a massive wealth transfer is quietly unfolding beneath the surface. And if you're not positioned correctly, you're on the wrong side of history. Let me paint you a picture of what's actually happening. Gold just shattered through $4,000 per ounce. Silver blasted past $50. These aren't just numbers on a screen. These are signals, warning signs, or if you're positioned correctly, they're opportunities of a lifetime. But here's what nobody's telling you. This isn't the top. This is just the beginning of a wealth transfer that's been building for decades. You see, wealth doesn't disappear. It never does. It just changes hands. And right now, it's moving from those who trust paper promises to those who hold real, tangible assets. From those who believe in the system to those who understand what's really happening behind closed doors. Let me take you back for a moment. In 1971, President Nixon closed the gold window. He severed the last link between the dollar and gold. At that moment, gold was $35 an ounce. The government told us everything would be fine. They said the dollar would remain strong. They promised stability. What happened instead? Gold went to $850 by 1980. That's a 2,400% increase. But more importantly, it was a wealth transfer. Those who understood what was happening positioned themselves in gold. Those who didn't, they watched their purchasing power evaporate through inflation. Fast forward to 2008. The financial crisis hit. Banks were collapsing. The government stepped in with bailouts and money printing on a scale we'd never seen before. Gold was around $800 an ounce at the start of the crisis. By 2011, it hit $1,900. Another massive wealth transfer. Those who saw it coming and positioned themselves in precious metals protected their wealth. Those who stayed in paper assets, many of them lost everything. Now here's where it gets interesting. What we're seeing today makes those previous transfers look small, because this time, it's not just one country. It's not just one crisis. This is a global monetary reset happening in real time, and the smart money has already positioned itself. Central banks know something. They've been accumulating gold at record levels. In the past 2 years alone, central banks have purchased over 2,000 tons of gold. That's the highest level of buying in over 50 years. Think about that. These are the institutions that print money. They can create currency out of thin air, yet they're converting that currency into physical gold as fast as they can. Why? Because they know what's coming. China's been particularly aggressive. They've been buying gold every single month for over 2 years straight. Russia's been doing the same thing. India, Turkey, Poland, Singapore. These aren't random countries. These are nations positioning themselves for a new monetary system. They're moving away from dollar dependence and into hard assets. This is de-dollarization in action, and it's accelerating. But it's not just central banks. Look at what the big institutions are doing. JP Morgan has been accumulating physical silver for years. They've built one of the largest stockpiles of physical silver in history. Why would a bank that can trade paper contracts all day long want physical metal sitting in vaults? Because when the music stops, paper promises won't matter. Only physical metal will. The COMEX, the major commodities exchange where gold and silver are traded, is showing signs of stress. The ratio of paper contracts to physical metal has been growing for years. There are claims on the same ounce of gold multiple times over. It's a fractional reserve system for precious metals. And just like fractional reserve banking, it works fine until everyone wants their metal at the same time. Then the whole system breaks down. We're starting to see cracks, delivery delays, premium spikes on physical metal, shortages at major dealers. These are the early warning signs that the paper market is losing credibility. When that happens, when people start demanding physical delivery instead of accepting paper promises, that's when the real price discovery begins. And that's when the wealth transfer accelerates dramatically. Let me tell you about something most people don't understand. The silver market is even more explosive than gold. Silver has a unique position. It's both a monetary metal and an industrial metal. It's used in solar panels, electric vehicles, electronics, medical equipment. The green energy transition alone is going to require massive amounts of silver. We're talking about hundreds of millions of ounces per year in new demand. But here's the problem. Silver production is declining. The easy-to-mine deposits are gone. Most silver comes as a byproduct of other mining operations. When those operations slow down, silver production drops. We're already seeing supply deficits. The market is consuming more silver than is being produced. That deficit is being filled by above-ground stockpiles. But those stockpiles are finite. When they run out, the price has to rise to either reduce demand or incentivize new production. Either way, silver prices are going much higher. And the ratio between gold and silver tells us something important. Historically, silver has traded at about 15 to 20 ounces of silver for 1 ounce of gold. Right now, even with silver's recent surge, that ratio is still elevated compared to historical norms. If silver just returns to its historical relationship with gold, we're looking at significantly higher silver prices from here. But if silver outperforms like it did in previous bull markets, we could see truly explosive moves. Now, I want to address something important. If you're sitting on retirement accounts, if you have significant savings in traditional investments, you need to understand your options. A lot of people don't realize you can hold physical gold in a retirement account. It's called a gold IRA, and it allows you to get actual physical precious metals into your retirement portfolio without triggering taxes or penalties. I put together a comprehensive guide on how this works. It's completely free, and you'll find it in the description below. If you have $100,000 or more in retirement savings, this is worth understanding. It covers the process, the rules, the benefits, and how to do it correctly. Check it out if that's relevant to your situation. But let's get back to what's happening in the markets right now, because the positioning phase is already underway, and time is running out to get on the right side of this transfer. Look at what's happening with the dollar. The dollar index has been under pressure. Foreign central banks are reducing their dollar holdings. The BRICS nations are working on alternative payment systems. Saudi Arabia is now accepting payment for oil in currencies other than dollars. These are seismic shifts in the global monetary system. The dollar's role as the world's reserve currency is being challenged in ways we haven't seen since World War II. When the dollar loses its reserve status, when foreign nations no longer need to hold massive dollar reserves to conduct international trade, what happens to all those dollars? They come home. They flood back into the United States. That's inflation on a scale most Americans can't even imagine. And when that happens, when people realize their dollars are losing value rapidly, they rush into hard assets. Gold, silver, real estate, anything that holds value. That's when the wealth transfer goes into overdrive. We're already seeing the early stages of this. Inflation has been running hot, despite what the official numbers say. Go to the grocery store. Look at your rent or mortgage. Check your insurance premiums. The cost of living is rising much faster than the government's inflation statistics suggest. People are feeling it in their daily lives. Their paychecks don't go as far as they used to. Their savings are losing purchasing power. This is the invisible tax of inflation, and it's accelerating. But here's what most people miss. Inflation isn't just rising prices. It's a wealth transfer. It transfers wealth from savers to debtors, from those holding cash to those holding assets, from the middle class to those who own hard assets and real property. It's one of the most effective wealth transfer mechanisms in history, and it's happening right now. The wealthy understand this. They don't hold large amounts of cash. They hold assets, real estate, businesses, precious metals, art, collectibles, things that maintain or increase their value as currency loses purchasing power. That's how generational wealth is preserved. That's how families stay wealthy through monetary crises and currency collapses. They position themselves in real assets before the transfer happens. And that's exactly what's happening now. The smart money has been positioning for years. They've been accumulating gold and silver while prices were still reasonable. They've been moving out of paper assets and into physical holdings. They've been preparing for this moment. And now that the transfer is beginning, they're positioned to benefit enormously. But there's still time. The transfer is in its early stages. Yes, gold and silver have already moved significantly. But compared to where they're going, compared to the full extent of this monetary reset, we're still in the early innings. The question is, are you going to position yourself now, or are you going to wait until everyone else figures it out? Let me tell you what happens when everyone figures it out. In 1980, when gold hit its peak, there were lines around the block at coin dealers. People were desperate to buy. Premiums on physical metal were astronomical. Some dealers ran out of inventory completely. The same thing happened in 2011. When the crowd finally realizes what's happening, when the mainstream catches on, it's too late to position yourself advantageously. You're buying at the top, paying massive premiums, and competing with everyone else for limited supply. The time to position yourself is when it's still contrarian, when people think you're crazy for buying gold and silver, when the mainstream media is still talking about stock market gains and cryptocurrency returns. That's when the smart money positions itself. Not when it's obvious to everyone, not when it's the lead story on the evening news. By then, the transfer is already complete. And here's something else to consider. This isn't just about making money. This is about preserving what you've already built. If you've spent decades building wealth, saving for retirement, creating financial security for your family, you need to protect that. You need to position yourself so that when the monetary system resets, when currencies lose value, when paper assets collapse, your wealth survives. That's what gold and silver do. They're insurance. They're the ultimate form of financial protection. Think about it this way. Every major currency in history has eventually failed. Every single one. The dollar has lost over 95% of its purchasing power since the Federal Reserve was created in 1913. The British pound, once the world's reserve currency, is a shadow of its former self. The German mark collapsed in hyperinflation. The list goes on and on. Currencies fail. Governments print money. Debt spirals out of control. It's happened throughout history, and it's happening again now. But gold and silver? They've maintained their value for thousands of years. An ounce of gold today buys roughly the same amount of goods and services it did 100 years ago, 1,000 years ago, 5,000 years ago. That's real wealth preservation. That's how you protect yourself across generations and through monetary crises. The wealth transfer that's beginning now is going to reshape the financial landscape. Those who understand what's happening and position themselves accordingly will emerge wealthier and more secure. Those who don't, those who trust in paper promises and government assurances, are going to watch their wealth evaporate. It's harsh, but it's reality. It's happened before, and it's happening again. Look at the technical picture. Gold has broken out of a multi-year consolidation pattern. It's making new all-time highs. The momentum is building. Silver is following. And when silver really gets moving, it tends to outperform gold dramatically. We saw this in 2011. We saw it in 1980. Silver is more volatile, more explosive, and when the crowd piles in, the moves are breathtaking. The fundamentals support this move. Supply and demand dynamics favor higher prices. Central bank buying continues unabated. Industrial demand for silver is growing. Investment demand is increasing as more people wake up to what's happening. The paper market is showing stress. All the pieces are in place for a sustained bull market in precious metals. But beyond the technicals and fundamentals, there's something deeper happening. There's a loss of confidence in the system. People are starting to question whether the government can really manage the economy, whether the Federal Reserve can control inflation without crashing the economy, whether the dollar will maintain its value, whether their retirement accounts are really safe. This loss of confidence is the fuel that drives precious metals higher. And once it starts, once that confidence begins to crack, it's very difficult to restore. We're seeing it in the data. Precious metals ETF holdings are growing. Coin sales are surging. Premiums on physical metal are elevated. These are signs that demand is outstripping supply, that people are waking up and positioning themselves. The early adopters are already in. The early majority is starting to move. When the late majority and laggards finally catch on, that's when prices really explode. And here's the thing about wealth transfers. They're not fair. They're not equitable. They don't wait for everyone to be ready. They happen quickly, decisively, and they reward those who saw it coming and positioned themselves accordingly. The wealthy get wealthier because they understand these dynamics. They study history. They watch what central banks are doing. They position themselves ahead of the crowd. That's how generational wealth is built and preserved. You have a choice to make. You can dismiss this as fear-mongering. You can trust that the system will work itself out. You can believe that your paper assets will maintain their value. Or you can look at the evidence. You can study history. You can watch what the smart money is doing. And you can position yourself accordingly. The wealth transfer has begun. Central banks are positioned. Institutions are positioned. The smart money is positioned. The question is, are you? Because once this transfer accelerates, once the crowd realizes what's happening, it will be too late to position yourself advantageously. The premiums will be astronomical. The supply will be limited. The opportunity will have passed. This is your moment. This is when decisions are made that determine financial outcomes for years, even decades to come. This is when wealth is either preserved or lost, when fortunes are either made or missed. The signs are all there. The evidence is overwhelming. The transfer is underway. Don't wait for permission. Don't wait for the mainstream media to tell you it's okay. Don't wait for your financial advisor to recommend it. By then, it will be too late. The time to position yourself is now, while you still can, while supply is still available, while you can still get in before the crowd. The wealth transfer has successfully begun. The only question that matters now is, which side of it are you on?